Coca-Cola had a better than expected first quarter, but that may not matter because business is cratered. Just think about all of Coke's exposure to restaurants, sporting events, and movie theaters. Coke said it has seen a 25% global volume decline. Moreover, Coke thinks the impact to the business in the second quarter from coronavirus will be material. Today, I want to talk a bit about Coke, but not necessarily as a business. More importantly, I want to analyze the chart for Coke and see how it reacted to the first quarter report and to see what the charts indicate for the future. You should do this for stocks you're considering as an investment. Understanding how the charts react will help you gain an edge in your investing. So, let's take a look. First, here's how Coke performed in the first quarter. Net sales were $8.6 billion dollars versus the estimate of $8.25 billion. Dollars. Operating profits were $2.45 billion dollars versus the estimate of $2.25 billion. Dollars. Diluted earnings per share was 51 cents per share versus the estimate of 44 cents per share. Now, all of that was great. They beat across the board. But more importantly, on March 20th, Coke pulled their full year 2020 guidance, blaming uncertainty from the coronavirus pandemic. That guidance had expectations for full year 5% organic revenue growth, 8% core operating income growth, earnings of $2.25 a share, which would have been up 7% year over year. And you can expect Coke did not provide any guidance update. As the earnings report indicate, prior to the coronavirus pandemic, Coke had good momentum. Now it's a completely different story. So let's take a look at the charts and see how Coke is evolving. And we're going to start off here with the 6-month daily chart on Coca-Cola, and the symbol is KO. For disclosure purposes, I do own Berkshire B shares, which has a position in Coca-Cola. Now, the top of the price chart, the recent top was there, and we're down here now. And then the earnings only came out, so today was the only earnings or subsequent earnings activity we've had. But you could see from this point of there, things started to slide on the way down. You can take a look at that here in the Mac. You had a sense that the fast line is turning over and perhaps is going to head through that slow line soon enough. You get a better idea here with the histogram, certainly the top at that point there. Now you see pretty much the same here in the price rate of change, relative strength, stochastic, and then the Williams. Now the Williams topped here, which was before the top in the price chart. And then with this subsequent decline, you should have known that things were heading on down. Now, the daily chart is one thing. The weekly chart is more important because once the power shifts from the daily to the weekly, then things can take off. So you want to watch for when that's going to happen. So what we're seeing in the daily chart is somewhat expected. Now, for the future, we want to see what the weekly chart's doing. So let's go to those charts now. So now we're looking at the 2-year weekly on Coca-Cola, and you can see the top, the recent top there. Of course, the downdraft to that point there, the bounce up to here, and now we're heading on down again subsequent to the reported earnings. Now let's go here into the Mac. You can see here, we talked about this many times, the difference between the slow line there and the fast line. That means there's lots of room for volatility. Now that bottom here with the fast line tried to move on up but got reflected down. So it's getting that reflection right now, which means that there's definitely going to be some volatility. You can see that there in the histogram. Moving into the price rate of change. Now this is one of the first things you want to keep your eye out for. Here was the bottom of that downdraft. It's very important to watch where the fast line bottoms out here on this next downturn. Hopefully it'll bottom someplace above this level here. And if so, then you know that the stock is starting to gain some strength. So watch this. It's at negative 10.15 right now. So hopefully it'll bottom someplace in between here. I'll just say there. Hopefully it'll come down here and then bounce back up. So then you'll see some improvement here into the relative strength. You're going to watch for the same thing. You want some improvement there. So you want to see this come on down and get reflected back on up. Now you can see here in the stochastics that the fast line already went through the slow line. That's good improvement. Now the fast line is coming back. We'll see if it can stay above the slow line. Let's see if the slow line heads up like that. And if the fast line can stay above and get reflected on up, that would be good. There's also a possibility it could come through. Then at that point, you want to see if it holds above that level. Same thing here into the Williams. That point there was a very negative downtrend. So hopefully this next downtrend can stay above that negative 80 line and hopefully get reflected and head back on up. If so, then you've got some improvement. That's going to give you the confidence to go into this stock. Now for me, my trigger often is to wait for the fast line on the MAC to turn and head up and go through that slow line. So it doesn't always happen. Sometimes I'll pull the trigger before then, and which I've done many, many times now in this latest crash. But that's my typical trigger line. Things are different now. So I may be pulling the trigger a little earlier than I would normally. So watch for those circumstances. That's going to tell you the strength of the stock and if it's improving. And hopefully that'll give you the confidence to invest in the stock. But as usual, conduct your fundamental analysis. And for today, that's ChewDog Charts. Thank you.